Good afternoon. This is Todd Horwitz coming here from the floor of the CME Group in Chicago, and we're going to continue to follow the Ultra Bond, which has been quite the nice trade for us here. And of course, what we're talking about now is we're seeing a lot of fear. You know, as we go back into last week and we saw the Syrian attack at the bombing there, that created a little bit of a fear in the market. We've seen some of the other products act, and of course, pushing the bond, I think, to the upper end of our levels, which is where we're looking to now sell these bonds here, up at around that 162, 163 level. Now, when we look at the overall picture, the Fed, which is trying to raise rates, is getting a little bit put back by the bond traders. They've been forcing the Fed to rethink their position. As we looked at it from the beginning, if we go way back, we thought that the bond traders and the fixed income markets would force the Fed's hand and force them to raise. Now it seems like they may be telling them that they better slow down as the Ultra Bond holds up here at these levels. But again, we have the fear, and we have the Fed, and now we have the opportunity to sell them. I think this is the time now, when we look up here at this upper level here, that we're going to see, I think, a fairly significant sell-off. We're at the upper end of this range. We know that rates have to start to go higher under any circumstances. That's the only way that the economy can get out of the whole picture and start to see some new jobs in the whole picture. So the only way that we can really see true growth is if we can see a hike in rates, which would bring down the Ultra Bonds. And of course, that's what we're looking for. We're looking for a pretty significant sell-off. As we looked for about an 8 or 9 point rally coming in off of a short squeeze, now we're going to look for even bigger. We're going to look to go out and take out the lows here. Now, it won't happen in one day, but I think now is the time to start looking to short and looking for opportunities to see these pull back much more significantly. And that's really what we're looking at right now. Again, we've got another Fed meeting coming up, but overall, the big picture is that hopefully the free markets will force interest rates higher, which will then, of course, bring the bonds down, and they've ran a little bit too far to begin with. That's the way I see it. This is Todd Horwitz coming from the floor of the CME Group in Chicago.